Yo, give me a second, boys. Okay, so first of all, apologies. Earlier, what do you call it? What's that thing called? My stream just crashed, as it does when I don't know. My laptop just loves to do it, but by the grace of God, we're gonna get a new one soon. Anyhow, we have. Can I show like this? We have not a long time to stream, but I'm gonna just give my general idea of the things I'm gonna be looking for. See if there's a potential trade that we can take either live or if we can take it in the near future. So first things first is to look at the pairs that we are trading. So DXY, USD and GU, EuroCAD was already here for yesterday. So I'd like to look at DXY, which gives a general context towards the pairs. Now, for the daily, I've been quite bearish for a while. The kind of thing you kind of have to be wary of is, though we were bearish, look at this. We had 1, 2, 3, 4 days of indecision down here. 1, 2, 3, 4 relatively bullish days. So in just candlesticks, well, that's 8 days of bullishness or 8 days of non-bearishness, which means that a lot of the time, though the market may be bearish, there's 8 days of opportunities where you could have entered buys. And within that days, with those 8 days of buys, there's going to be buy signals, sell signals, all the sorts. So you're going to sometimes miss the buy entry, or you could even just miss the move altogether, or even lose despite it being a bullish day. So there's a lot of intricacies that goes into this. So I am still overall bearish. And last week we did fail to break this high. I was in buys at around this point here, which was a bad place to buy the price. Why? Or buy the dollar, because it's at a high. I would have needed price to come up, clear this high over here, confirm it wants to stay above and retest and then continue upwards for me to be comfortable to say that, okay, this is now bullish. Now this bearish kind of bias I did get from ICT, which is Inner Circle Trade, which is Michael J. Huddlestone. We are still in the process of going through his mentorship, so we are a work in progress in a way. Nevertheless, I still have information. This is more like a documentary anyway, but I'm still going to share my thoughts and let's see where we're at. So EU, USD, since we are bearish on the dollar, especially now that we're at this high premium where price can easily reject and come down from, like we did once, and we can for sure do it twice. So if that is to replay, we are bearish on USD, so bullish on EU and the likes. So what does that mean? Well, first of all, external liquidity, right? We marked the weekly high, we've marked the daily lows because the daily high got taken out yesterday, and it's technically also been taken out today already. So that's happened. If we zoom in a little bit, we can see, let's actually go through the sessions. So we have, oh, I can't even see my chat, hold on. Okay, cool. At least I can see it. Can't type, but I can see at least. Okay, cool. Okay, so Tokyo sessions highs are currently intact. That means simply that there's liquidity above here that hasn't been taken out. We then have liquidity that has been taken out, which is down here, which we can make this one red for the sake of just showing. We then have London session highs, which have not been taken out. So make this grey. And then we have London lows, which technically have been taken out by the session kind of just following after. So we've taken out 2 lows worth of liquidity. We are aiming for up. Why? Because we're bearish on the dollar, which means that we're bullish in EU, because this is us buying against the dollar, because the dollar is in the second part of the pair. So we're looking for buys in this instance, right? We've taken out 2 areas of sell side liquidity. Or no, sorry, is that buy side or is that sell side? Yes, we've taken out 2 areas of sell side liquidity. This is, I don't know if I saved it on this. Yeah, I don't think I have it. Okay, this is London, Asia sell side. This is London sell side. Sorry, it's a tongue twister. So we're taking out both of those sell side liquidities. Let me just establish what all these grey lines are first. So this is the daily low. Okay, these are just areas of liquidity, but we're gonna move this. Keep the daily low. So we get rid of this. Get rid of that fair value gap over there. Okay. So unmarked is session highs. Marked is what it is. So this is the weekly high, daily low. Okay. So remember, we're looking for buys. So what does that mean? Well, we're currently at 145, which is the time frame within where we should expect a Judah swing. We want to go up, price is going down. That's a good thing, because we need to get price to cheaper levels where we can now fulfill our orders. So that's what the algorithm is telling us. We've just swept this low over here. We have pushed to the upside. We displaced down here. Well, over here we displaced upwards. If you go to 5 minutes, you can then see what I mean with this fair value gap over here. So it's so like I move my mouse and moves 2 seconds later. Let's change this to a bullish value gap. Price is currently heading down towards it. Interestingly, price has actually displaced downwards. Obviously still in progress, so can't really mark that out. Any which way, we're gonna wait for the next 15 minutes. We should expect to see price, maybe come down to this bullish fair value gap, displace upwards again, and then we can look for some entries. But we're going to be looking for entries from the next 15 minutes. Let me double check if there's news. I think there is news today. Today's Thursday, right? What's today? Wednesday. I think it's Thursday. So okay, we really had this was bullish for the USD. Interesting. What did I do to DXY? Just the initial push. Not enough to take out anything. Okay, interesting. Move tomorrow as well. Okay, cool. GU, what do we got? Let me just remove all these runs real quick. So, mark some liquidity for us. This is getting away. Weekly high over here. We're currently in this range, actually. So, make this the weekly low. I'm gonna dip in like 3-4 minutes. Weekly high. We are within this range, but I'm going to change it because this is yesterday's low, and then this is daily high. It's more accurate anyway. Change this to dailies. Get rid of that alert. Okay. All right. There's also equal highs over here. Let's mark off the sessions. Signs of the Tokyo session high. London high, interestingly enough. It's been created. Okay, cool. Down here. Right, so this is London's dealing range, where there's equal highs over here, with the New York session high. And then this is London's lows right here. Oh, I know what I did. I don't know if it's saved on my laptop though. Hold on. No, I didn't save it. Okay, so what do we notice? So Tokyo session created this range. It was bearish for a little bit. Then price from here took out the Asia lows at around about London open, and we displaced to the downside. Within that displacement, okay. Price then it's like a breaker block now. So price then displaced to the downside, and then came up through this fair value gap, retested it, dropped down, broke through, created equal highs over here to then come back down to the center. So what do we notice? We notice that these highs are equal highs, which is the area of magnetism to price, basically being that it is a pool of where price was to get to. And then we've pulled back to the inverse fair value gap. I don't know if the breaker block is the correct terminology, but it definitely has been turned into an inverted fair value gap, IFVG. What is this GU? Sorry, multitasking is not easy. Okay, this is what we're looking at. Simple reasoning, nothing crazy. Asia session can do a range. London swept this lows, created these lows over here. Also, I should be able to. I didn't say. London then swept down here, came back up through the fair value gap. Then New York created these equal highs, displaced to the downside, back into this inverted fair value gap, and then price potentially can go back up to these equal highs / the daily high. So this is incorrect terminology. So inverted fair value gap. A breaker block is the same thing but for order block. What? Inverted fair value gap. Cool. This is our posture right now. We'll see. Because we didn't take out these lows here. It's an accumulation of ideas. So the first idea is we are bearish on DXY, which is the dollar. So we're bearish against the dollar. We don't think the dollar is going to go up. We think it's going to go down. And we then looked at EU. We then saw Tokyo session's highs and lows here. London swept the lows of Tokyo session, and then the lows of London session got swept by the close of the market. And then price then ranged upwards towards these highs, being over here, which is this New York high over here. And then we're predicting price to come down a little bit. Since it swept, come down to this area of entry to then buy it to the external liquidity up there. However, GU is a little bit of a mixture of things where GU hasn't swept this London liquidity over here. So we can actually make this a liquidity pool. But it has liquidity pools over here. I can just keep this grey line over here to signify it instead. So yeah, this grey line is the low here. Then we had price came back up to this fair value gap, rejected it a little bit, broke through, created equal highs, retraced to the inverted to fair value gap now, and then we are expected to push up to these daily highs over here. And then we add it with the combination of the fact that we're bullish or bearish on the dollar, bullish against everything against the dollar. It then adds up to our agreement. We have daily equal highs over here, equal highs on this range. There's a lot of liquidity, a lot of magnetism of where price should be pushing towards. So that's why we entered the market in the manner that we did. Let me just post this into the Telegram or the Telegram. Okay, and that's us for the day. I normally end my stream whenever I enter a trade or just kind of vibes. I like to stream for like hour longs. English. I like to stream for like over an hour long, but today is an exception. We're on the go. Don't have a lot of time. What I might do though, I am planning some of these. I'll probably do it tonight, one of them tonight, which is like an education stream where we work through a video and make notes together, and then I teach from my own notes because I want to learn a new strategy. So I used to be a breakout trader, supply and resistance trader, and now I'm transitioning into smart money concepts, into the idea of liquidity and the algorithmic price rather than it being led by supply and demand. And then I'm also trying to follow the footprints of institutional traders such as banks, hedge funds, etc., rather than come up with my own strategy. So that's the reason why we're having this pivot. The reason why I had this pivot is because I noticed a common pattern between my losses. They all seemed to be swept. I think I was on a losing streak, and every single one of those trades, like 10 in a row, something ridiculous, was due to a liquidity sweep. And I was like, really? So I tried to include liquidity sweep in my price, in my entry, or in my kind of idea, but it still didn't fully work. It just improved it slightly. So that's why we're relearning it so I can understand why. And I believe there's power in understanding why, because once you understand why, you can then replicate certain things. It's like a recipe. You know, you can make a cake one time by listening to somebody's orders, or just creating a plan, or just buying it. Like you can have a cake for one time if you buy it from the store, right? But if you learn how to make it, you learn the recipe, then not only you're no longer limited to one cake. Now you can make multiple cakes. You can make a cake whenever you want. And so I felt like I was limiting my knowledge because it helped me to keep to my trading plan, but I needed to expand my knowledge and to get out of my trading plan. So it was like a whole paradox I was in. So this is what we're doing. So we're actually trading as we're learning. What that means is that I will be documenting everything. So rather than me waiting and improving on the slide or improving in the background, and then I come out with this amazing idea, I want to show you guys the process of what it takes. And the reason why I'm confident, despite not being there yet, is because of the fact that I was there at one point. And so it's just about rebuilding my knowledge and actually making it something that is repeatable. And yeah, so I do have to go. The updates of this trade will be posted in the Telegram. The Telegram is the first link in the description. It's where I post all my trades. I keep a track of how much we made. Like we actually are in profit, even if this hits stop loss. We're still in overall profit since we started because we had one very good trade. So yeah, we're going to be keeping an update, see how things go, and we're just going to start journaling more. I think that's one of the things I've been lacking in the streams, is that I use the streams as an excuse to kind of not perform the good practices I was practicing, and I don't want that to be the case. So I'm going to make my streams, I guess, showcasing those good practices, just so it keeps me accountable. And I'm in this journey here. Everything is live. I'm not changing. Like, it's not edited. I'm not deleting any video. My stream has been crashing live. I've been on my laptop. I've been on my computer. We're finding ways to make this work. I want to really complete this challenge. And the most important thing to me, more than any number that I could hit or any figure I can complete, is going to be being consistent for the next 1,000 days. Now, I should have disclosed that's 1,000 weekdays because you can't trade on the weekend. So there's 2 days I do lose every week, which is, a lot in the year. So this is probably a 4-year plan. But I think it's a necessity, and I think it will be very good once we hit to day 365. Like, how do you expect me to be the same as I am today in 365 days when I'm the different person from last week? So it's very exciting to see. This trade doesn't look good. It looks like it's going to hit stop loss. What I might do is I might mute it and come back and then maybe look again at the markets. But for now, I'm out. So yeah, enjoy. I will actually, I'm just going to end the stream instead. I think that's easier. But yeah, I think it's traded just hit stop loss. Let me double check on my account. Okay, it hasn't hit stop loss yet for me, but it's very close to it. So yeah, we'll see. You never know. I mean, it's at the edge of the order block, which started this move upwards. But yeah, we'll see. I'm gonna leave it to let it run, and then we'll just keep an eye. Appreciate you guys for tuning in. I'm gonna end stream. I decided rather than muting myself because I'm going to a lot to do. So yeah, appreciate you guys. I'm gonna be done hopefully soon, and then I will be here tomorrow. As always, catch you guys later. See you in a bit. Peace.